we need to get more rules. So we'll get additional details at the end of November. And then once that happens, every country around the world, the 136 countries, will have to embark on local legislation to adopt these rules. And so some are already starting, like the United States, and we fully expect the EU, all 27 member states have signed on to the OECD framework. And so we expect the EU in November, December to come out with a directive to mandate the countries in their community to get this done as well. So it's going to take some time, probably a year or two, before every country gets the local laws enabled.
But that ratification has been so critical. I mean, it's been interesting to see countries like Ireland and Hungary that have profited so enormously from having these kind of minimal tax rates. That was very good to get those two nations across the line, wasn't it?
It really was. I think Ireland particularly is significant because of how many US, UK, and other countries, multinationals, including the Australians, will have operations in Ireland. They had a 12% tax rate. They did a lot of outreach to the business community, wanting to understand the ramifications, and joined the day before it was actually the framework came out. So a big news for sure.
Some, though, have criticised 15% as too low, that they should have aimed higher. I mean, the OECD average is around that close to 25% mark. Was it just the practicalities of getting people across the line?
Yes, I think you have to begin somewhere, Bev, and so 15 ended up being the compromise position. Clearly, the U.S. Treasurer, Janet Yellen, wanted to have a 21% rate, but that I think was too lofty for countries to, to get there. So 15 is where they've landed. These rules are very complex, so it impacts the tax haven countries, if you will, or the lower rate countries. And then it also impacts, if they don't change their rates, then where the country is, or where the company is headquartered, what country, they can do a top-off tax up to the 15%. So these rules are very complicated in terms of how they work and who ends up being net winners and net losers.
And I want to hear more about that. But for the moment, for example, Apple's a good example where they don't pay tax in the country where they have businesses. Is that going to change?
There is another aspect to the framework called Pillar 1, which is really allowing companies to be taxed in where they have distribution subsidiaries or just even distributions without any kind of physical presence or anything in that country, but they're selling to the customer base in the country. So we call those the distribution countries. So Pillar 1 was trying to give taxing rights to those countries. So if someone was selling digitally, not through bricks and mortar, through digitally, they would be able to tax. Those rules have been remanded back for further consideration. Super complicated. Everybody wants to get united around them, but we need more details before everybody will sign up for that.
Yeah. So let's talk about tax havens and which countries are left as tax havens, and then, to your point, how originating countries might be able to claw back some of that money.
So the way these rules work is some countries that maybe have tax rates lower than 15%, they'll have incentive now to really reconsider that and potentially bring their rate up. So Ireland, for example, had a 12.5% rate. They've decided for companies over a certain revenue threshold, they'll bring the rate up to 15%. If they chose not to do that, what would happen is wherever the company was headquartered, the headquarters country would have the right to do, I'll call it a top-off tax between the 12.5 to 15. And so if a country chooses not to change their rate, then the headquarters location will tax it. So you can imagine everybody's doing their calculations to figure out what will I win and, what's best for me. So a lot of the countries that have had lower rates are really going to have to think, is that how they want to compete? Will they have to look for other tools to really be, competitive? Small countries, maybe in an island, or, this is one of the factors they used in order to get business to come to that country. And then they tax the wage earner. So that's going to have to change in the days ahead.
Yeah. So will we see tax havens, that were the subject of the recent Pandora papers, left out in the cold or left in a position where they have to also start rethinking their whole strategy?
I think that countries around the world are going to have to rethink their strategy. How do they attract business? What do they use? I mean, there's still a big difference between a 15% rate and a 30% rate, as you know. So, you know, where will that? So you still can be competitive on tax rates, but the range has narrowed.
And so do you think this is now the start to get it to actually a more even playing field right across the board? So 15% is the start. We might see it get up to that 20% mark.
I think it could happen in the days ahead. I mean, everyone's calling this now a race to the middle as opposed to what it was before, which was a race to the bottom. So that's the perspective. But there's still, you know, a range. And so where you come out on the OECD rankings of your headline tax rate, and remember, Bev, it's not about the headline rate so much. It's about what you actually pay. So remember, there's deductions. And one of the things that's not solved in this multilateral agreement is what's the base of taxation? What income actually gets taxed on these rates? So that might be another project that we have to embark on.
Yeah, but at least a great start, as you say, so complex. Great to have you explain a lot of it for us, Kate. Thanks so much.
Thank you, Bev.